I want to invest my surplus money in share market. Which company? Reliance, ITC, State Bank. Which company? I don't have time. Somebody called me, a broker or somebody, you invest here, Prakash, it will be good. Then I will invest there on the basis of advice given by somebody. But how that advice given by that somebody, a broker or some, maybe he got the advice from some another person. But ultimately the origin of that advice came from where? There is mutual funds. There are knowledgeable persons who are analyzing the financials of an organization. PL account, balance sheet, cash flow, notes to accounts, they are analyzing the financials. Because at the grassroots level, somebody, some authorities there who are analyzing. What they are analyzing? Whether the company sales are improving or not, whether the company's profit level is good or not, whether the company's assets and liability at what position, what is the market of the industry and all that. There is somebody doing that analysis. They are recommending that this company is good, we should invest. And then from there, it is coming in my ear that I should invest. But suppose I don't want to invest in the share market based on any instructions, based on any advice by any broker. I want to do my own analysis. I will be going on the company's website, Reliance, ITC. I will be looking their financials, which is a public document. I will be analyzing and deciding whether I should invest in the company or not. So I'm talking about an investor, those who want to invest in the shares of the companies. Second, suppose somebody is a supplier for the company. Somebody is supplying goods and services to the company. That supplier is interested whether the company will be able to make payment. How much credit should be given to the company? They will also analyze the financials of the company. They will also see at the financials. Because then only you can decide whether you should be giving credit to the company. Somebody is becoming customers of the company. Customer doesn't mean that you just purchase the goods, it's over. Customers need to get after sales service. Company will be able to give after sales service when their business is growing. They will be able to help the customers when their business is growing. I will be able to help you all when my number of students are increasing. Otherwise not. Maybe somebody can think that sir is interested in profit and all that, but you understand. Any profitable organization can only serve you better. An organization which is not earning profit and all that, they will not be able to serve you better. So, when you are a customer, then also you are interested how the company's financials are behaving, how they are dealing with the customers. When we talk of banks, financial institutions giving loan to the company, they will be looking at financials of the company. The general public community, those who are not shareholder, not customers, not financiers, not I will say suppliers. Suppose in my building anybody, they are not concerned with me anyway, but in the building I will be helping the building to grow. I will be supporting when I am growing. Somebody can say that not for profit oriented organization don't have profit motive, but not for profit oriented organization also wants to generate income. If you are working in a club, in a charitable trust, in a society, उनको भी पैसा कमाना होएगा. Always we understand that a business will be growing, will be able to serve the community when they are generating proper income, they have proper financial condition. And these financial condition documents are public documents. Whether you as a CMA, whether me as a CMA, whether any knowledge, हम लोगों को फाइनेंशियल समझ में आना चाहिए. इवन टू अ डॉक्टर, इवन टू अ लॉयर, इवन टू एन इंजीनियर, फाइनेंशियल्स का अंडरस्टैंडिंग होना जरूरी है. मे बी नॉट वेरी हाई लेवल, बट बेसिक अंडरस्टैंडिंग ऑफ फाइनेंस. इन आवर सिलेबस पार्ट 1 they have said how to prepare finance, how to prepare financial statement, balance sheet, PL account, cash flow, that is 15%. In part 2, they have included analyzing financial statement, which is 20% of part A. In part 2, part A is 20%. Now, preparing financial statement actually starts from books of original entry, debit, credit, then what are the books of original entry, how the transactions occur, how they are recorded and all that. Then trial balance, then balance sheet, then PL account, then studying each individual item of PL account, balance sheet, a separate topic about them. That's thing. So normally if you say, if suppose there is an ACCA student is studying the balance sheet PL account preparation 3 times. One at the lowest level as a bacha, 10 pass out, 12 pass out, for around 20-25 classes, around 75 hour. Then at the middle level again at what I should say, skill level, again 100 marks paper, again I take 25-30 classes, again it takes around 75-80 hours of study. Then again at the final level, analysis of the financial statement, more detailed into that is again 80 hours classes. So a student of normal Indian course CA, CWA, any course are studying accounting how many times? With a teacher or their personal study, 250 hours. Actually, we should be taking 250 hours to complete this. But then in that case, we will be able to give CMA US exam after 2 years. I am teaching all these things. But then, in your case, it is 15%, and out of 15% also, the major area which they focus, everybody knows. Who knows about CMA US syllabus, they knows that कि ये चीज पे questions ज़्यादा आता है. So in that case, we should focus on that area. That means by doing this, we are not becoming accounting specialists. For that reason, those who are doing CMA US, for their accounting vast knowledge, they are doing IFRS also. कि by CMA US से they become good sound knowledge of management accounting. And then with the IFRS, good sound knowledge of accounting. But at the time of CMA US, if you start studying those 250 hours, you will puzzle yourself. Because you will find that you have studied 250 hours and 15% of the syllabus is only complete. And that too also there are so many areas, everything you cannot do correct, the problem will arise. So we are going to study balance sheet, PL account, format, cash flow, the basic types of things which they cover, which is very important in the life, but as a selective study. Because they have included everything in the syllabus. So if you open any material, उन्होंने कुछ नहीं छोड़ा है, सब चीज डाल दिया है. लेकिन बात ये समझनी है कि हम एग्जाम पास करना है और नॉलेज भी लेना है. अब आपको जब मैं पढ़ाऊंगा, मैं कोई डेबिट क्रेडिट पढ़ा ही नहीं रहा हूं. Somebody will say that sir I don't have accounting background. कोई टेंशन नहीं है. आप बोलेंगे सर मेरे को डेबिट क्रेडिट पढ़ना है, आ जाइए, आप बोल दीजिएगा, मेल कर दीजिएगा. I will incorporate, but those classes, bachas classes are in the afternoon because they don't have any office. So I teach them in the afternoon 2 o'clock because they are going to school, college and all that. तो उनको उस समय पढ़ाया जाता है. मॉर्निंग में मेरे पास उसके लिए टाइम नहीं. But I start from debit. I start from why the financial statement and all that from basics. And then I teach them in around 25-30 classes of 2.5 hours, 3 hours each. Balance sheet, PL account कैसे बनता है, वो वहां तक पहुंचाता हूं उनको. वो उनका बेस लेवल ही रहता है. That is only the base level. That later on goes on into the next level. But मैं आपको कोई डेबिट क्रेडिट नहीं सिखा रहा हूं बिकॉज कोई काम नहीं है. They are not asking any question on journal, ledger and all that. If your concepts are clear, you will be able to. Because nowadays, there are accounting packages. If you say the accounting entry will be done in the package automatically, because it's an IT age. But we need to understand that these financial statements are public document. And a management accountant, financial accountant, anybody should be able to read the financials, should be able to judge the financials in some basic manner. कुछ तो थोड़ा ज्ञान होना चाहिए. Because नहीं तो management accountant बन के कोई फायदा नहीं है. We will not be able to help the management in taking the right decisions. So accounting knowledge is essential in every commerce course. तो अब the format as per US GAAP. The format as per US GAAP क्या है? In our case, they have written in part 2A some of the difference between IFRS and US GAAP. But in CPA US, every point the difference between IFRS and US GAAP is there. What is IFRS and US GAAP? International Financial Reporting Standards, IFRS. That is from UK. There is an International Financial Reporting Advisory Council. They developing the accounting for the whole world, not only UK. Because UK is called financial world. Financial, everything there. So from UK, They developed an organization in 1975 and developing global accounting standards for the whole world. In this last 37 years, in the whole world, 90% of the world has accepted IFRS as their local accounting. Some of the countries accepted exactly the IFRS as their accounting, and some of the countries have said that they will be making their own accounting based on IFRS. Like India is making their own, Ind AS. Up till 2015, India said that IFRS will be our local accounting. But in 2015, India changed and said that we will be developing our own Ind AS, Indian accounting standards based on IFRS, which is called convergence. Even US GAAP is also converging with the IFRS. Why this is happening? The whole world wants that there should be one accounting rules, regulations, knowledge. So I am preparing financials in India that will be understandable to everybody in the whole world. So globalization of accounting is happening for many years and it has gone to the next level now. We are going to study US GAAP because it's a US course. Now, any accounting rules, regulations, guidelines in US GAAP are very, very detailed. Indian accounting IFRS is not that detailed. If somebody has knowledge of US GAAP, they have knowledge of everything. Relating to accounts, there is nothing left. Because anything arises in US first of all. Any type of transaction, any new thing. So the accounting developed in US first of all. Then only it comes in the whole world. For that reason, US accounting, US GAAP, US generally accepted accounting principles are very detailed. So we are going to study US GAAP based accounting, but there is not so much difference between Indian accounting, IFRS and all that. Wherever the basic differences are there, maybe it is not relevant for the exam, I will be discussing, don't worry. But at least first of all, we need to understand the format. PL account, balance sheet, cash flow, statement of changes in equity, format. What is the format? Assets, liabilities. Now normally, balance sheet are prepared. Balance sheet means assets and liability detail. And income statement are prepared. Not as this. They are prepared like this, in one single way, which we say as horizontal or vertical. This is assets, liability, not that assets in the left hand side liability. Whole organization, whole world is following items, schedule, then the figures. If you just do Google search for any company, items, schedule, figure. So items generally the people are writing first of all assets, then the liabilities. But US GAAP says that first of all liability, then the assets, whatever may be the case, but all the assets. The major difference between Indian accounting, IFRS and US GAAP is, US GAAP says that we will be writing assets, first of all current assets, then the fixed assets. First of all current liability, then the non-current liability. What is current, non-current? Anything payable, receivable within 1 year is current. Anything payable, receivable beyond 1 year is non-current. This computer, laptop, camera, this property, how many years I am going to use in the business? Already I am using for many years and I am going to use for many years. They are non-current. But if suppose there is a student join the classes, he has financial issue, he said he is paying 50% now, he will pay 50% next month. So he is an asset, that receivable, but I will receive that money within next 1 month, within next 1 year. So he is a current assets. Cash in pocket, in cash drawer, bank balance, inventory, everything will be giving us money within 1 year. Cash is already money. In Indian accounting IFRS, we say that the current assets we will be recording later. We will be recording non-current assets earlier. US GAAP says that we will be recording current assets earlier, but non-current later. US GAAP says that we will be recording the assets based on liquidity. Liquidity means which can give you money very fast. So cash and bank first of all, then other things. But in India, we first of all record illiquid assets at the top. In IFRS also, illiquid assets, land, building, plant, machinery. Then I will be writing current assets. Ultimately, everybody says that assets need to be written. India and IFRS says illiquid than liquid. US GAAP says liquid than illiquid. Doesn't matter. That's a basic difference between their formatting. So current assets, long-term, property, intangibles, other assets. In these items, can anybody give example of long-term investment? Can anybody give example of long-term investment? Huh?
5-year bonds.
5-year bond. We can say that any security where maturity is greater than 1 year is long-term investment. Can I say that if I am investing my money in Reliance Industries shares, it is a long-term investment? Can I say? Can I say? No. Actually, for share, there is no maturity. The company shares will be there forever. I can say it's a long term when I am investing with a motive in my mind, I will hold for 4-5 years. I will not sell the share within 1 year. Then it will be said long term. But if my intention while purchasing the investments in shares of Reliance Industries that I will sell within 1 year, then it is short term. So investment in securities can be long term. Even in shares also can be long term. The organization need to decide what is their motive to hold the investment. But it's not that only the bonds are the long-term investment. Equity share can also be long-term. I have Saraf Academy shares. Saraf Gurukul Private Limited is a company. Saraf Academy is my brand. So I have shares. Already the company is there for 14-15 years. It will be there forever. तो मैंने तो शेयर बेचा नहीं है ना मैं बेच रहा हूं. That is my long-term investment. That is not my short-term investments. So long-term investment is not only bonds. Long-term investment can be anything where your intention of holding the investment for more than 1 year. First of all, current within 1 year, then long-term, then property. What is intangible? Can anybody give example of intangible asset? Goodwill. But normally goodwill ही हम बैलेंस शीट में नहीं दिखाते हैं यार. सभी लोग वही बोलते हैं. But we don't record goodwill. Why we don't record goodwill? मेरी बैलेंस शीट में goodwill नहीं है. क्यों नहीं है? How I will find out value of goodwill? There are methods. But the accounting body says that goodwill, if I will say land, building, computer, laptop, receivable, सबका कितना cost पता है. लेकिन goodwill का cost मालूम नहीं है. So if the accounting bodies allow you to write goodwill in the balance sheet, then it is very difficult to read the balance sheet. Goodwill you can record when you have purchased goodwill. How we purchase goodwill? I am purchasing another business. The assets value of the business $100 million. I am paying them $110 million. So I am paying $10 million for their goodwill. So goodwill is an unidentifiable intangible asset. Logo, patent, trademark, we can identify. But goodwill is everything. Goodwill can be incorporated in the books when you have paid for it. Otherwise, goodwill cannot be recorded. But other than goodwill, there are many patent, trademark, copyrights, technical know-how, all are intangible assets. अब ये other assets क्या आ गया? When the current assets is written, long-term investment written, property written, intangible written, ये other assets क्या हो गया? What is that other assets? Anybody can say? Then what is current assets? Madhu Sekhar. If the cash is other assets, then what is current assets? Current assets is cash, bank, inventory, receivables, any short-term advantage. Other assets कुछ है नहीं. Normally it is not there. If you will tell me, if anybody has studied accounts in the past, in the balance sheet there used to be an heading. What is preliminary expenditures? Anybody remember? अगर कभी बचपन में अकाउंट्स वगैरह पढ़ा होएगा, कभी भी, anybody. Tax receivable is current assets only. Sivang, tax receivable is current assets because will be received within 1 year. और वैसे टैक्स रिसीवेबल होता क्या है? गवर्नमेंट तो टैक्स का पैसा सीधा देती है, वो बोलती थोड़ी ना देंगे, वो दे देती है. Other assets, if you say that there is some expenditure you incurred you want to defer it, you don't want to write it as an off. Prepaid becomes under current assets. Suppose I have done advertisement expenditure to promote my courses, and the benefit of the advertisement expenditure I will be getting for 5 years. So I decide to write off the advertisement expenditure in PL in 5 years. Suppose 1,20,000 and 80,000 balance, so 80,000. But normally the accounting does not advise that. Earlier, around 10-12 years back, there was a concept called the deferred revenue expenditures. But now the accounting body of the world are saying that maybe your advertisement expenditure will give you benefit for 5 years, but it is not an asset. Write it off in the PL account, deduct it as an expense fully. So other assets बोलकर कुछ होता नहीं है, but then a provision is created कि अगर other assets तो लिखा जाए. Normally you cannot find the balance sheet where other than current and non-current any other asset is there. No other assets are there. In the liability, current liability payable within 1 year, long-term liability payable beyond 1 year, and the shareholders' money, those who are the owners of the company. In the shareholders' money, owners' equity, like in Saraf Academy, I have given my money as a shareholder, so share capital, owners' equity, capital stock means share capital only. Additional paid in capital. In India, we use the word share premium. If we are getting from the shareholders more than the face value of share money, then it is called premium. In US language, we say additional paid in capital. Additional paid in capital is called share premium. So there can be any reserves other than share capital, retained earning, general reserve. What is all these? Retained earning is the business done by the company, the generated income. That income is called retained earnings. But other than retained earning, general reserve and all. Why retained earning is a liability? Can anybody give logic? For the business, why it is a liability? When the profit generated, it should be an asset. Why the profit generated is a liability? I'm not going into debit credit. As I said, I don't know debit credit for your classes. We are saying me and my business are separate. Prakash Saraf and Saraf Academy are separate. Maybe you are not able to get the feeling in this, but I have invested in Reliance Industry. I have actually shares of Reliance. Reliance Industry and Prakash Saraf is separate. So if Reliance Industry generated income, that income to be given to Prakash Saraf and all the shareholders, till the time it is not given, it is a liability for the company. The retained earning is a liability because of the separate entity concept. The owners of the business and the business are separate. If I am doing business not in the name of company, in the name of Prakash Saraf business is different, Prakash Saraf is different. So whatever capital I am using in the business, for the business it is a liability. So whatever profit generated by the business, that profit is not yet given to the owners of the business. So that profit till the time it is not given to the owners is a liability. So the concept of retained earning is a liability, is separate entity concept. Business and businessman are separate. So this is, you can say, items, how those items are presented.
Sir, one question. In the
Yes.
previous slide.
Yes.
So, what is the difference between equity and capital stock? There are two items. The APIC.
Actually, we are putting an heading equity. Under equity, there is capital, there is retained earning, there is risk reserve, that reserve. So it is written as an equity breakup. Equity breakup. Because normally in the balance sheet, when you write current liabilities, you write non-current liabilities, and you write equity. Under equity, you will be writing capital. Under equity, you will be writing retained earnings, general reserves and all that. Equity means those who are the owners, whatever their money in the business. Okay? Now, if we go into the format of income statement, there are two ways to prepare income statement in Indian accounting, in IFRS and US GAAP. We are talking about income statement in US GAAP. Single step multiple step. Multiple step means, suppose I am getting tuition fees from all of you. Then I have invested my surplus money in the share market, I am earning dividend. Then maybe I have invested my surplus money in the banks, I am getting interest. Then to provide classes to all of you, there is a software and all that expenditures. Then maybe I have taken loan from bank, there is interest expenditure. So we will divide the income into different parts. In the income statement into different parts. Then it is called multiple step format. Or we divide the income statement into single part, not considering this income. So single part means revenue, any revenue, whether it's sales revenue, whether it's interest income, whether it's dividend income, total revenue and the total expenses, net income. That is revenue less expenses, net income. No distinction between whether it is operational, non-operational. Operational means which you do daily. My operational income is tuition fees. My non-operational income is interest on bank deposit. My non-operational income is dividend on shares, because that is not my business. Suppose we are talking about a mutual fund. They have the business of investing in shares and all that. For them, getting dividend is operational income. Suppose I am talking about banks. Banks business is giving loan, taking loan. So interest payment and interest income is operational income for them. But for Saraf Academy, interest payment, interest income is not operational. Whatever you do as a business, that is your operational income. Other than business, whatever other incomes are coming, that is non-operational. So if multiple step, because generally in the practical world, organizations are following multiple step format for income statement. Sales minus cost of goods sold, tuition fees minus cost of tuition fees, that is becoming gross profit. Then there is administration, selling and all that. These are also operating expenditures. Then it is coming income from operation. Then I have invested in share market, dividend income, interest income and all that. Interest expenditure I am giving, this is other income or other expenses. Then this is 83 minus 4, 79,000 is my income before tax. Then income tax on this I am paying. Then the net income. This is multi-step approach. You will be recording your operating income separately, non-operating separately, then the total income. And this is single step approach. You will be recording everything as an income minus the expenses. Generally, practically, the organizations are following multiple step approach. Do we need to prepare in the exam income statement balance sheet? No. Whether in CMA, US Life, it came in the exam? Never. In objective type, though, it cannot come. In essay type, they are never asking prepare PL account balance sheet. Because in objective type, only out of 100 questions, if they give 6, 7 questions, 8 questions on this, they are not getting the possibility to give questions on this part in essay type. I'm not saying essay type question don't come, but not about preparation. But if you don't understand the format, how we will be able to understand anything which we want to study? We will not be. What is this? Every listed company in all over the world, listed means Saraf Academy is not listed. Every listed company need to mention in their PL account, this is the total profit divided by the number of shares of the company. What is the earnings per share? How much earnings per share the company generating for the shareholders? Whether this earning is increasing or not. That way. Just give me 1 second, I am coming. Just 1 second, sorry. So this is we are saying as income statement. Normally, practically, the organizations are following multi-step approach. In India, in IFRS, in US GAAP, everywhere. But everywhere it is said that if you don't want to present the income statement so much breakup, you can follow the single step approach. But otherwise, if we don't break up, then the understanding to a common man will be very less. Ki bhai, Saraf Academy performance would be based on the tuition fees, income from tuition, that is most important. If I am earning from share market, that is not the way by which I can analyze the performance of Saraf Academy. So operations activity are very important to growing in the organization. So multi-step approach the organizations are generally following. Suppose if I will say, what is cost of goods sold? Cost of goods sold and selling expense administration. Administration, there is somebody is accountant in my organization, selling to sell. There is some marketing I am doing on Facebook and all that, that is selling expense. Then cost of goods sold. In my organization, most of the expenditures are cost of goods sold. Live class, software, electricity, all because of you that you all will be able to get the classes and all that. So all these are sales minus cost of goods sold. So sale minus cost of goods sold is gross profit, and then operating expenses deducting operational income. From operational income we add non-operational income or expenses, then it is called net income minus tax, it's called profit after tax. Now in IFRS there is no heading unusual gains or losses. Earlier in Indian accounting in IFRS there was something called extraordinary items, extraordinary things. But in US GAAP still unusual gains and losses are there. You will say that, sir, where it is written? In the example, the format does not say unusual items. But if unusual or infrequent items are there, they will be recorded under separate heading. Unusual items can be losses or write down of assets. Write down of assets means what? Can I say depreciation? Losses or write down of assets. Suppose this computer I am using for business purpose. So this computer life is 4 years, 5 years, something. So on the computer there will be depreciation every year for 4 or 5 years. So I can say that depreciation will be written in the PL account as an expense. For me, depreciation is a cost of goods sold, because I am using this computer, laptop and all that in giving the classes. That is my operational activity. So that is cost of goods sold. But what is the write-off or something? Suppose I have purchased this computer, say 3 years back, fact, actually, and I purchased for 1,20,000. In 3 years, depreciation already done 50,000. So what is the value of the computer is still left? 70,000. Don't go into journal entry, not required. Just simple thing, the assets is used in the business for 4 or 5 years, 1,20,000 at the value which assets was acquired, and in 3 years, depreciation already done 50,000. So the asset value left 70. But I'm realizing that in the market, so many new computers have came, better functionality and all that. So the value of this computer, 70,000, this does not command. The market price of this computer is less than 70,000. And I need to write off this 70 minus market value in the books. I can. We will be discussing this as an impairment later. But just that is what? Gains or losses from exchange of currency. You are dealing in foreign currency, and in the foreign currency some exceptional gains or loss. What is that exceptional? Suppose maybe there was some receivable, you suffered losses. That is operational. If in your business regularly foreign currencies are coming and going, then to it is normal. But if it is exceptional nature, then it will be coming here. Restructuring. I want to change my head office from one place to another. I want to change my business from here to there. Restructuring. I want to change my structure of the business. Other gains or losses. Strike, adjust, anything which is not of a recurring nature, which is not of a usual nature, which is exceptional, that will be coming as unusual, infrequent items. And if it is there, it will be written after income from operation, unusual, infrequent items as a separate heading. If it is there in the income statement, it will be coming. What is the reason of writing it separately? If there is a loss by theft, loss by fire, if there is a strike, lockouts, what is the reason that they need to be written separately? Why? Because they are not recurring. Maybe because of that we suffered loss, or there is a gain, but that will not arise again. So the people should be able to understand that this is an exceptional item. Again, it will not arise, so it should be written separately. But in IFRS, there is no separate heading. It is included in the normal heading only. You all can try this because very simple. But I mean to say that in the balance sheet as per US GAAP, first of all current, then non-current. And in the liability side, current, non-current. For income statement, generally multi-step approach is advisable. Operating income, non-operating income should be recorded separately, just as for understanding purpose. Suppose this is an example. In our exam, generally this type of question don't come, because this, even in CPO also, the questions are slightly of a higher standard, but when we discuss the format, so let's do a question on the format basis. We company's trial balance. What is trial balance? Anybody knows? Just a basic accounting, not required in exam. What is trial balance? Not required to say, just I am saying. Suppose in my business, every day so many transactions are happening. Somebody paying tuition fees, salary payment, rent payment and all that. The transactions are happening. Those transactions are recorded first of all in any organization in books of original entry. Sale transaction, purchase transaction, cash transaction and all that. Which we say sales day book, purchase day book and all that. From there, we pass journal entry. Journal entry means something debit, something credit. Then the journal is posted in the ledger. The debit credit are posted in the ledgers. Then the ledger, in the ledger there are two sides, debit side, credit side. In the ledger there will be a net difference. The net difference of the ledger, if the debit side is 1 lakh, credit side 80,000, net difference 20,000, it's called debit balance. So this is this. The trial balance is balances of all the ledger accounts. For going into more detail, I take to explain all these at least 4 to 5 classes with kids. Those who are 10 pass out, 12 pass out. Anybody interested, you can join those classes. You just give me information in mail that sir incorporate me in the Bachcha's classes. Those classes will be in the afternoon at around 2 o'clock. It will be starting in next month around March. I will be incorporating you. There is no problem, no charges. If you want basic debit credit understanding, that can be done. But in CMA US exam, no debit credit, no balances knowledge required. We can just, with business concept, we will be able to understand. Accounting, hardcore accounting knowledge is not required. So this is a question given. Trial balance of the income statement accounts for the year ended 31st December each. Sales, cost of sale, administration, loss on sale, sale commission. Then interest revenue, then freight out. Freight out means if you are selling something, you are paying carriage outward. Loss on early retirement of long-term debt. There may be a long-term debt you paid earlier, you need to pay extra. Loss. Uncollectible accounts expenses, bad debts. There were customers who have not paid money. The question is, income tax rate is 30%. In V's year end, multiple income statement, what amount would we report as income after income tax from operations? Now they are saying multiple step. But in the question, do we need to follow multiple step? I need to follow all income minus expenditure, net income. I need to find out that. The question is asking what is the net income of the company. They are just creating googly with you multiple step. I don't have to present anybody. But suppose in the class, when we discuss multiple step, and you are preparing multiple step income statement of this organization, what is the first item you will write in the income statement? Everybody. What is the first item you will write in the income statement? Everybody need to communicate. Sales from operations. What is that figure? Sales. What is the figure? 5,75,000. Then what is the next item you will write? In the multiple step approach, what is the next item you will write? Cost of sales. So cost of sale is how much? 2,40,000. Then what is the next item? Gross profit. That is coming 5,75,000 minus 2,40,000. That is coming 3,35,000. I am calculator for all of you. 3,35,000 is the gross profit. Then administration 70. Then administration 70,000, then sales commission 50,000, then actually, if you want to prepare multiple step, there is something you need to do. The sales commission and freight out both are selling expenditures. Administration is given. Loss on sale of equipment. If the equipment is used in operations cost of sale, then the loss on sale will be added with 240. But if the equipment is used in administration, then the loss on sale will be added with 70. But if the equipment is used in sale, then it is added with this. So I don't know, since the question is not saying whether 10,000 will be added with this, will be added with 70, will be added 50. But cost of sale 240, then 50,000 plus 15,000, 65,000 each is selling, and 70,000 admin, 10,000 where we add. Now, loss on early retirement of long-term debt. Loss on early retirement of long-term debt. There was a long-term debt we paid earlier. When you pay earlier, there is any loss possible. If I have taken loan from bank for 5 years and I am repaying the loan in 3 years, whether I need to pay more or I need to pay less. If I have taken a loan from bank for 5 years, so then why they are saying loss? If you take a loan for 5 years, you are repaying in 3 years, you need to pay more, Madhu Sekhar. Then why they have written loss? We all are working professionals, Madhu Sekhar and all that. There is a foreclosure charges. When you have taken a loan for 5 years and you go for early payment, then the bank will charge extra, which is called foreclosure charges. आप लोग सब तो काम कर रहे हैं यार. Why you are thinking these things as a very, very technical? Apply your brain, which you are doing regularly in the organization. If I have taken a loan, suppose car loan for 5 years, and I am repaying the car loan in 3 years, bank will charge extra charges. I don't have to pay 2-year interest, that's other thing. But the bank will be charging foreclosure charges. Every bank has these provisions are there. So when we repaid the loan earlier, we need to pay some charges. Those charges are what? Cost of sale, admin, selling what? Those charges are what? Cost of sale, admin, selling what? They are financial expenditure in the multiple step approach. In the multiple step approach, it will be written here. It will be written under interest expense. Because along with interest expense, this is also a part of interest. Not that interest rate, but it is a part of interest financial expenditure. So if you want to say, then in that case, to the presentation, multiple step will be many things. Because sale 575, 240, cost of goods sold, gross profit, then it will be coming administration 70,000, then selling 65, then uncollectible accounts receivable 15,000. Bad debts, where it will come? If the bad debt is administrative department responsibility, 15 will be added with 70. If bad debts is a credit controller, sales department responsibility coming with here. So 20,000 interest, 15 and 10,000, where it will be considered, I don't know. That depends upon further information in the question. Then I will be getting operational income. Then I will be saying non-operational income. Non-operational income is out. Interest revenue 25. Then it will be coming total income before tax. Then minus tax I will be doing. Tax, how much they have said? 30%. Then I will be getting net income after tax, which is the answer. But in this question in exam, it will come 6 lakh total income. Total expenditure 420. What is net income? 180. On 1 lakh 80, 30% tax. So 1 lakh 80 into 30%, 54,000. So what is the income after tax? 1 lakh 80 minus 54,000. How much? So इधर तो कोई मल्टीपल स्टेप ये सब कुछ नहीं करना है. कैलकुलेटर में 6 lakh minus 420, that can be done verbally also. 1 lakh 80, 30% gone. 1 lakh 80 into 70%. Answer, finish. So if we are in an exam where the format of PL account balance sheet is asked as a big question, 10 marks, 20 marks question, then those things will be given and you will follow. In your exam, they don't ask profit calculation, but still it is very simple. So just that we are concentrating which are income, which are expense. The net income is 1,80,000. 1,80,000 may say 30%. Tax gone 126. But if you want to prepare multi-step proper income statement, then to further information required. Bad debt will be admin or selling. Then the 10,000 loss on sale of equipment, admin or selling. When that information will be given, then only you can prepare multi-step approach, financial statement, or I can say income statement. Up till now, for the time being, any doubt? Just that one more thing before any doubt. In practical life, you will be able to see income statement double. If any company will present income statement, they will present for December 21, December 2020 both. Balance sheet for current year, last year both. It is rule in the practical world, comparatives should be given. So that anybody who is seeing the financials, they will be able to analyze the changes. What growth, what good thing, bad thing happen. But in exams, even in those exams where they ask prepare PL balance sheet, they don't ask double. They ask only one current year. But in the practical life, it is comparatives to be given. In IFRS also, Indian accounting also, US GAAP also. And these financial statements are very important to analyze the company, whether we will supply goods or services, whether we will buy goods from them, whether we will give loan to them, whether we will invest in the company. These are public documents. You will not be able to analyze the health of the organization unless and until you don't have knowledge of their financials, financial statement, PL account, balance sheet. A basic understanding relating to format. Now in the income statement, actually we say that the income statement is comprehensive income statement. What is comprehensive income statement? Whatever we discussed up till now, that was income statement, operative, non-operative, that is only part of the comprehensive income. In the comprehensive income, there are two parts. One is income, which we discussed, and the other one is other comprehensive income. Normal income, this is called normal income. No, not this. Like in this example, this is normal income. Now under that we will add other comprehensive income, say 1 lakh. Normal income 1,26,000, other comprehensive income 1 lakh, total comprehensive income 2,26,000. The income statement is divided into two parts. One is income and one is other comprehensive income. The total is total comprehensive income. What is other comprehensive income? Other comprehensive income which is not part of the normal income. Then what is the other comprehensive income? These are the items which are included in other comprehensive income. Suppose you are working in a company where 5,000 employees are working. Anybody in the class working in a company where 5,000 employees are working? Anybody? Madhu Sekhar, Sheikh Siraj, Kamarwal. So your company is very big. So in your case, Madhu Sekhar, when you are getting salary, they are deducting from your salary the provident fund and all that. Good. They are deducting from your salary the provident fund and all that. Okay. That provident fund money when you will get? PF, ESI and all that, when you will get? When you will retire? From where you will get that money? After retirement, from where you will get this money? From the company or from somewhere else? Now in the world there are two types of schemes the organizations are following. One is the organization is keeping the PF money with them only. They are not giving to government. And one is the organization giving the PF money to government, which we say in accounting defined benefit plan, defined contribution plan. Defined contribution plan means your money deducted from your salary given to government, and now you will be getting the money from government at the time of retirement. Defined benefit plan means the company is deducting your PF money but not giving to government. The company is managing that money on their own. And the company saying that they will be giving you return on that money 12%, 13%. But if the money is given to government, then the government is giving fixed return, say like in India, presently government is giving, I think, 6.5 or 7%. But if the organization is keeping the employee money, PF money with them, and the organization is saying to the employee, we will give them 8%, 9%, then they are interested. So there is a term called a defined benefit plan, where the company don't give money, PF money to government. The company keep with themselves. You will say more detail. This defined benefit plan I teach in CPA or in ACCA classes for 5 classes. 15 hours. कैसे बोलूं मैं अभी? You all need to understand. But आपके syllabus में है, question आते हैं, कभी नहीं आते हैं. On defined benefit plan, never they have asked question in CMA US. So why we will study? So I mean to say that just for understanding purpose, when we are going for a defined benefit plan, then there are so many. Suppose in your company, Madhu Sekhar, 1,30,000 employees. Every month, every quarter, every year, there is so much money deducted from the salary, which is not given to employee, which is kept by the company. That will remain as a liability in the company, which is called fund liability. Now the company has given commitment to Madhu Sekhar and other persons that we will be giving you this much money. For that, in the company, there is actuarial valuation done. Actuarial valuation means the actuary will be coming at the end of the year, will be analyzing all the employees' health, salary, what is going to be their salary, their retirement age, at what age they are, and calculate this is, if today the company will close, this is the liability of the company. But the company has recorded in their balance sheet a different figure. The ledger balance is coming different figure, what is deducted from salary. But the actuary is saying that since the company has given defined benefit, have given the obligation, so the amount should be coming this. The difference of that amount is coming here. Pension over under. You will say that, sir, why it is not an actual expenditure? You understand that this amount will be changing every year. Some employee retire, some new join, some left, this, that, every. So an actuary needs to be called and they will do the valuation. The difference comes here. This is there in IFRS also, other comprehensive income. Translation gain loss means, suppose I have a foreign subsidiary. I have a subsidiary in US. In the subsidiary, there are assets and liability in dollar. Those assets, liability will there last year also, this year also, coming year also, every time will be there. On those assets and liability, if the dollar value changes, dollar value in India 75, it becomes 76. Then the assets liability value I will be recording in the balance sheet in Indian currency. Because of that, gain loss arise. That gain loss is not an actual gain loss. That is notional gain loss. That is transaction gain loss. Translation. Gain loss on cash flow hedging. Now cash flow hedging means, now this whole thing is very cumbersome thing in accounting. Every area, one single area takes classes. Not only one class, takes classes. The translation gain or loss takes classes. Over under, I mean to say funded calculation takes classes. Gain or loss on cash flow hedging, it's a very difficult area. Even when I take the classes, then also a student find problem in understanding the concept. Hedging means what? You have the tension that you will not pass the exam. So what is hedging? You will study well, so the chances of passing, failing will not arise. Similarly, the company has different types of risk. A company has taken loan. On the loan, they need to pay the interest. The interest is variable rate of interest, not fixed rate. Or the company is going to purchase goods after 6 months, import. The foreign exchange rate may go up. The cash flow which will be arising in future, for that cash flow, there may be some loss. There may be some problem. The company do some hedging. For that hedging, any gain or loss will be coming here. Unrealized gain or loss on available for sale. As I said earlier, you all said that investment in equity share is short term, not long term. But I said investment in equity share is long term also. I can say that I have invested in Reliance Industries and I will be selling when I will be getting this price. When I will be holding for 2 years, this and that. That means it is available for sale. But I'm not going to sell recently. The long-term investment are named like this. But the value of shares are changing. That gain or loss will be coming here. That is not unrealized because my objective is long-term. That is other comprehensive income. And then Fair value change in case of changes in instrument specific credit risk. If the company has issued debentures, they will pay to the debenture interest principal later. But after the issue of debenture, company credit rating deteriorated. Company business condition deteriorated. Maybe they will not be able to pay loan ka interest and principal. Then relating to that, there is fair valuation done. That loss or gain will be coming here. That means all these items are not a part of net income. They are part of other comprehensive income. Foreign exchange, pension, cash flow hedging, available for sale securities, then any instrument which the company has issued where the credit risk has changed. In your exam, they will be asking questions in relating to this. They will be asking 4 or 5 items. They will be saying which item is other comprehensive. You need to remember translation gain or loss in foreign exchange, pension under overvaluation, gains or losses on cash flow hedging, unrealized gains on losses and available for sale securities, then fair value accounting for any long-term liability of the company, then the loss or gain on that. These things are coming as other comprehensive income. Now generally the logic arises, I studied CA and all that in 1998. At that time ye sab nahi tha. This came around 7, 8, 10 years back. Earlier it was not there. In IFRS, other than this, one more heading is there. Revaluation gain of the assets. Suppose land, building, plant, machinery I am revaluing. The computer value goes up. The land value goes up. Building value goes up. I will be recording here only other comprehensive. But US GAAP does not allow that. US GAAP is saying that revaluation gain is part of net income. But IFRS says that revaluation gain is part of other comprehensive income. What is other comprehensive income? Nothing of this item we have got in pocket. The realized gain, net income we have got in pocket. But this nothing of this income or losses we have suffered, losses we have not suffered, or gain we have not paid. So the accounting body said that, but these are gain or loss. They will be coming as a part of gain or loss, but they are non-realized. They are not yet realized. They will be coming here as non-realized gain or losses. Why the accounting body said that? The accounting body said that, kabhi to realize hoga. If suppose I have shares of Reliance Industries, I have not sold, but it is available for sale, the value has gone up, so the gain I will be definitely realizing in future. So why these things will be ignored from the books? Why these things should be recorded as realized gain? Because if the company's realized income is 1 lakh, company will pay dividend out of 1 lakh. But from these income, company cannot pay dividend because these are not realized. Till the time you don't sell the investment, till the time these incomes are not realized, they will not be used for dividend payment. But they need to be informed to the owners, to everybody, that these are unrealized gains and losses we have. That is recorded as other comprehensive income. The accounting body of the world is saying that US GAAP, IFRS, Indian accounting, you can record in one statement your net income and other comprehensive income total. Or you can make 2 separate statements. One statement is net income, this one. One statement is net income, this one. One another statement, other comprehensive income. It's upon you. Now, why both are allowed? Why not they are saying only one thing? That we can record other income and normal income together only, or we can record separately only. We are saying that if it is one statement, the traditional net income is subtotal and other comprehensive is total, then total. The creation of new financial statement is not necessary. You don't have to take time to create other comprehensive income. Net income gets buried. There are many who will not understand dono alag alag kya hai. 1,25,000 net income, 1 lakh other comprehensive income. A layman will think total income is 225, but he need to understand this is not realized. The 2 statement represent income is separate, which indicates that the gain or losses identified as other comprehensive are not available for a distribution of profit. So the accounting body could not come into conclusion up till now, and they are allowing both the things. You can record other comprehensive income separately. You can record other comprehensive net income together, and the total will be coming as total comprehensive income. In IFRS also, in US GAAP also. Just that in IFRS, revaluation is also a part of other comprehensive income. But in US GAAP, revaluation is not a part of other comprehensive. Revaluation is a part of normal income only, normal net income only. Income statement is not only net income. Income statement is other comprehensive income also. Income statement is called the total comprehensive income. It is not only the other money, net income. It is total comprehensive income. Then comes, if we are saying balance sheet, if we are saying relating to this, I will not discuss now, just giving an introduction. When you are able to see my PL account balance sheet, the question arises that why the cash flow is required. If suppose in the PL account, the profit is 1 million. The PL account is showing income minus expenditures 1 million. Can I say my cash balance is also 1 million? If my tuition fees minus all the expenditures is 1 million. So can I say my cash balance is also 1 million? Why no? What is the reason that the income is 1 million and cash is not 1 million? Any one or two reasons? Unrealized income, what is that? That unrealized, forget. I am talking about net income, not other income. Net income is 1 lakh. So why that net income is not equal to cash balance? Non-cash expenditure. You start from sales. Whether the sale is cash sale or credit sale also. The sale is cash sale, credit sale both. The expenditures are cash, credit both. There is, you can say, depreciation, amortization and all that. So PL account is not giving you the cash information. PL account is giving you information of income, but it is not giving you cash detail. Now suppose, in my business, profit is 1 crore. Profit is 1 lakh, 1 million, 10 lakh. But my cash balance will not be 10 lakh. But for doing business activities, for paying to my staff, for purchasing goods for day to day, I require cash. At the same time, for repayment of loan, for all that, I require cash. So an organization can survive if they have profit, negative, loss. But an organization cannot survive if they don't have money. I can survive for some time if I am suffering loss, tuition fees less, expenditures are more. But I cannot survive for a single day if my money is not there for doing the business. You can run your house with cash, but you can't run your house with negative cash. Negative cash वैसे भी हो नहीं सकता. In the cash pocket you must have cash. In the bank money will be there. Negative money is not there. You will say bank overdraft. I am coming later. We are saying that it is very essential that just looking at the profit and balance sheet is not enough to analyze the financials of the company. We need to look at the cash balance, how much cash inflows are coming, cash outflows are there, we need to analyze. Then only we can analyze the health of the organization. Cash is the lifeblood of any organization. We can sustain business if we are suffering losses, but we can't sustain if we don't have money. पैसा तो होना पड़ेगा. For that reason, all over the world, Indian accounting, IFRS, US GAAP, along with the PL account and balance sheet, they are asking, we need to prepare cash flow statement separately. In your exam, 15% each part A. In 15% say all the questions are in objective type. 3.75 in 75. 75 by 3.75, how much? Can anybody say? One question 3.75, 75 marks question will be on part A. 75 by 3.75, how much? 75 by 3.75 will be how much? 20. Out of 20, 15 questions in exams will be on cash flow. Maybe 14. But out of 75 marks, 75% questions will be on cash flow. In the exam, for CMA US student, it's, you can say, something where not a single question we should be doing wrong. कि अगर exam में 14 questions of cash flow come, I should be searching in the exam hall which question is of cash flow, I should be doing 100% correct. Why? Because it is very simple. Not because of debit credit knowledge, basic business knowledge. I will be teaching cash flow not because of debit credit. Maybe anybody has studied accounts in your BCom or any places. So many times you must have given for cash flow. I will be able to teach you cash flow with 100% clarity in 1 hour. With general business concept. So any student want to pass part 1, not a single question of cash flow should be going wrong in exam. Not a single. Because out of your 20 question, 14, 15 will be cash flow. You are taking a risk of balance. Out of balance also, there are some important area, non-current asset inventory I will discuss. So you will be able to manage balance 2, 3. 1 or 2 we will be taking risk because that much study is not possible for part 1 in respect of accounting area. So we will be discussing cash flow in the next class, but I will be sharing these slides with all of you. Don't worry. You will be going through with this. Start revising, do the recording, do the in-between question which I have not done. Simple question those are. Those will not come in exam, but do that. And for the time being, start doing part E and F classes. Since 1 or 2 classes, let me finish, then in that case you will be able to feel the pain that so many things done. I always say in every batch, just give me 3 to 4 classes. Then you will find that you are lagging behind. But if from the first class only you follow the instructions, the problem will not arise. And when you follow that, you will be doing the recordings, studying the same thing, making your notes, then you will be able to score greater than 360 always. No tension will be coming. But if you think that I was there in the class, understood everything, no. So many things we discussed. You need to do it again. You need to make your notes. You need to follow the instructions. You need to make your planning. Then only you will be able to achieve your targets. Otherwise, time will go on passing like this, and one time will come when you leave it, which happens generally in CMA US. Don't make it like this. There should be any option in life that I will not give exam now. If I will not give, I will not be live, I will do Atmahatya. Like that. That commitment is required. Why I will not give exam? Because the classes we will be doing, say around 20-25 classes, around 3 hours each, 75 hours. You will be doing recordings of that 75 hours. You will be doing extra study 50 hours. और क्या चाहिए? कहाँ चाहिए? ज़्यादा तो चाहिए नहीं है. मैं तो अपनी क्लास को लेकर बोल रहा हूं आपको कि जो क्लास आप कर रहे हैं उसको उतनी देर आप खुद पढ़ोगे, उसके बाद अपने आप पढ़ोगे. 75, 75, 75, 1/3, 1/3, 1/3, 225, 120 days, 120 into 2 hours, 240, 225 is more than enough. Every day 2 hours. But focused study, conceptual study, not just doing the questions and all that. वो तो करना ही है. But conceptual study will help you to pass this exam very easily. ठीक है? Any time when you are free, you have to make your target. मैं कैसे बोलूं यार, आप कब फ्री रहोगे वगैरह. मैं रिकॉर्डिंग आप लोग को कल तक दे दूंगा, आज ही दे दूंगा. मैंने बोला तो अभी उमंग कि you will be getting the recordings next day, but I will try my level best on the same day only. तो क्लास तो कल या परसों नहीं है, क्लास तो नेक्स्ट वीक है. अभी तो बीच में मैं कोई एक्स्ट्रा क्लास नहीं डाल रहा हूं. The next class is next Saturday only. So you are getting ample of time to do the recording, complete part E, part F. उसका भी आप कर लोगे तो अच्छा रहेगा ना. आप अपना पहले प्लान बनाओगे जो मैंने शुरू से बोला. अभी फिर से यार सीता किसकी बेटी थी नहीं चालू करना है यार. I will share everything. ये मेरे को मालूम है यार. Don't worry. But you don't share कि sir I made the plan like this. No point. It's your planning, your life. You need to manage your life. Okay? So thank you to all of you. Study hard. All the very best for this part 1 batch for May, June. Everybody need to give exam. Everybody need to pass. 100% result I require. Okay? Thank you. Thank you to all of you. Take care.